Hey everyone, my name's Andy. My channel is Finding Value. I'm going to answer a bunch of questions that people are leaving in the comments section. I'm going to kind of rapid fire through a couple of them. And I'm just going to kind of scroll down and answer them as I go. And you guys can listen to my responses. Maybe everybody can listen to all these responses and it'll help a lot more people than just the single person I'm responding to. On the opposite side, what do you think of coal stocks? I think coal, because of its carbon, I think that's the one that's going to be out. From what I understand, and from what family members who work in the energy industry, they are removing coal-powered plants and putting in place natural gas power plants. So what I would look at is probably natural gas. That's me. You guys can do what you want. I've been avoiding coal myself. So it's not telling you guys what to do. This isn't financial advice by any means. But I'm not as hot on coal versus natural gas. I still like oil, and I think uranium is Mark McGwire in his peak. He's going to be hitting 70 home runs this season. So he's on the juice. He's swinging a tree trunk for a bat and flicking his wrists at the end of his swing. So that's what I think. That's what I think. I think uranium's the spot to be. Because of valuation, because of market deficits, because of green energy, because of energy return on energy invested, I can't name a single thing where uranium is necessarily bad. What about buying into strength? How does this apply now? We're seeing strength everywhere right now. I'm seeing strength in uranium. I'm seeing strength in diversified mining companies, copper companies, lithium companies. I'm not seeing it in some of the renewable type sectors yet. I see a couple, but some of these electric vehicles, they're still. I'm still watching them kind of carve out bottoms. But a lot of the commodities outside of oil, it still has weakness. But what I have noticed with some of the oil companies is that they sell off. You'll see oil down 5%, but the companies are only down like 8%, just a little bit more. So what I'm seeing in the oil companies is when oil goes up, the oil companies go ballistic to the upside. And then when oil goes back down, which I would consider to be a pretty good pullback, the oil companies are more resilient going down, which means buyers are still buying into it. And we're not seeing those large sell-offs in the oil stocks in comparison to how big the sell-off was in oil itself. So I'm seeing underlying strength in a lot of these oil companies, and I would be more inclined to be buying into them than selling them. So, but yes, I'm seeing a lot of strength. Coming back down here, I'd love to hear your thoughts on the Kondratiev wave. Your studies definitely align with that theory. I haven't done too much analysis in the Kondratiev wave. I know that they exist. I know there's summer, winter, fall, all that stuff. I've looked at it before. I don't look at it too much. It doesn't really impact what I see. I just look at the major. I look at decade-long patterns, see where the pattern is, see if it's coiling up like a spring, got that energy to just pop to the upside, to create a launching pad for a decade-long plus move to the upside, which we are experiencing in all these commodities. And if you're seeing it across a whole bunch of different commodity sectors, then that's where I get quite bullish. Here is what about cobalt miner stocks? Yeah, they're good. I just don't know as much about cobalt in general. I know that they're trying to actively reduce cobalt use and put in more nickel. So I've been more inclined to look at nickel miners, mining companies, or royalty companies. NILSY is the company that I like. They're a copper, nickel, PGM Russian company. They have all the metals that I like. It's like, wow, you couldn't pick more. They've got rhodium, palladium, platinum, copper, and nickel. It's like that's like every metal I like. Another one, which is cobalt and copper. Nova Royalty is one. EMX Royalty is another one that you might want to look at. Those royalty companies, inherently royalty companies are less risk because they have a diversified income. They've got a bunch of different mining companies that they have royalties on, and they're getting paid from many different companies. So it's inherently less risky. It gives you all the upside potential with a lot less downside risk. And I own a lot of the royalty companies in precious metals. I'm trying to buy as much as I can in the copper, nickel, base metal area as well. If if you could get interesting for Grand Tierra pick. Oh yeah, they're saying that some of the fair market value is like $6, and it's only, I think it's less than $1 or something right now. But yeah, I still hold Grand Tierra Energy. I'm not doing anything with it. There's another one, super speculative, Recaf. Recaf is a Reconnaissance Africa. I do own that company. It is a company in Africa that is searching for a big find of oil, and it's supposedly pretty good. I know they push it pretty hard on oilprices.com. So yeah, we'll see. So I never talk about Peninsula. I don't know much about Peninsula. I think I looked at it just once or something, but I don't know. I don't know as much about it. Maybe I can take a look into it for everybody. I know a lot more, and I've heard a lot more from other CEOs. So I've been more inclined to invest in those because of that. But yeah, I don't know much about it. But I guess PENMF is one that that might be good, that people like. I guess I have to look into it, but maybe I'll look into it and give you guys a response. I don't think I can chart that either on stockcharts.com. So that's one I don't. I can look at it through other charting things though. Take a look at Crown Point Energy. You won't be disappointed. It has gone down quite a bit. I did look at the chart briefly. The chart doesn't look too bad because you get a nice kind of pop up and then the move sideways. I think they're down in Argentina. I think it was them and Centris or something like that we're going to try to look for something. It says Brent linked growth of Argentina can finance debt cheaply. Has history given dividends. At this price, it will be at least above 25 cents. MGA is a solid play. I don't know MGA. I'll have to look at it. There's a lot of other ones looking at electric vehicles. Again, I like I like the electric vehicle play only because they're going to throw a bunch of money at this. Doesn't mean that I'm against it or for it. If they're going to throw trillions of dollars at something, I think you have to look at it. And if I see compelling chart patterns, if the chart patterns are breaking decade-long downtrends and they just look fantastic, I'm probably going to go into it. Just because if they're going to throw this amount of money at it, you could see just massive returns if we're in the infancy, as we are in electric vehicles. And if they do take off, I'd like to really have some money in it to take part of that. So that's why I've been talking a little bit about electric vehicles. Looking down here. So, and again, I know some people, they like to look at the cost of renewables and they'll say, well, renewables are cheaper. It's like, they may only look at one little aspect. So they might say, it costs a penny per kilowatt to produce electricity from solar. And it's like, okay, well, how do you store solar, guy? I mean, it's like, what are you going to do? Run it 20% of the time. So here's the problem. The upfront costs on a lot of these things are gigantic. So you could this is what the decision would be for a consumer if they're going to buy this, all right? You could have power 100% of the time through this natural gas power plant. You could just run it, right? You're going to get the max efficiency out of the natural gas plant if you run it 100% of the time, and you have the upfront costs of putting in a natural gas plant. This is the problem you have with renewables, all right? Renewables only work, let's say, 20% of the time. That means if I have a 1 gigawatt of natural gas, I have to put in 5 times, if it's only 20% efficient, I have to put in 5 times the amount of solar panels. The upfront cost on solar is massive if you have to put in 5 times. Now, that isn't a stable energy source. So how do you store it? Now you got to buy all these batteries. You have to mine all this stuff. You have to mine all the materials for the solar panels, for the batteries, for all this stuff. And on top of it, because you have to have swing production, you still have to buy the natural gas plant. You're just like, dude, you put 5 times the solar panels in, you buy all the batteries to store it, and you still got to buy the natural gas power plant. So how is that cheaper? How is that cheaper? Every country that's put in renewables has way higher costs for energy. The history isn't there. And you have to spend all this other money. So I don't know where these people are getting their data. And maybe in the future it will be cheaper. I don't know. But it's hard for me to understand that we're going to reduce carbon by expending copious amounts of carbon to do what they want to do. If you want to cut carbon, you're going to have to figure out different ways. You can't just go and put a bunch of holes in the earth, massive holes of all burning diesel and gasoline, ship it all around the world, ship it into a bunch of manufacturing plants, produce all these things. And I'll be honest, I don't even know if we have all the materials to sustain that many panels to be made, or wind turbines to be, or wind generators. I don't know if we have that much materials. I don't know. We'll see. I mean, there's a reason I'm investing in all these commodities. I don't think we have the materials to build all of it. I think prices are going to go skyrocketing higher. I think we're going to adopt a whole bunch of different solutions. I think we're going to continue to use oil. We're going to continue to use natural gas. We are going to install these solar panels and wind. We're going to have electric vehicles come online. I think we're going to use all of it. That's what I think. I don't think we're going to hit any of these carbon metrics probably, because once you hit a constraint somewhere, they're going to say it's more important that people don't die and that they have food to eat than it is to not have carbon in the atmosphere. That's just me. I could be wrong. But I am going to invest in electric vehicles. I am going to invest in some of the renewables. If they're going to throw this amount of money at it, I mean, I might as well be a benefactor of it. Hey, this is my favorite channel. Thank you. Thank you. It is my favorite channel too. That's why I created it. Yes, Andy, talk about David Hunter and his imminent melt up and then his 80% decline. And what would happen to our positions? Well, one would be saying that David Hunter is 100% right, and no one's 100% right. I did listen to his interview. I think the melt up, so what he's thinking, I think, is that we're going to have one last maybe decline in interest rates, maybe, maybe that's what he was talking about. But he thinks it's going to melt up after everything gets opened up. You're going to see this big rush of money in. And then he thinks it's going to be an 80% decline. But I think what's going to happen is that commodities are going to go up. Inflation's going to go up. So you're going to see inflation doing this. What they're going to try to do is interest rates. They're going to do this. So inflation goes up. Interest rates are going to want to chase it higher. But they're going to put their hand on inflation rates and be like, no. You're going to stay down here while inflation goes like this. Now, the difference between my hands here and here, as this gets greater and greater and greater, and if they hold the interest rates down here, if inflation goes like that and this gap gets bigger, what that means is that you're getting larger and larger real negative rates. Real negative rates is absolute fire. I mean, fire for commodities. They're going to go berserk. So what I see is the largest opportunity of any investments that I've ever seen in my life. And what I mean by that is the ratios on commodities in relationship to other assets have never been this cheap. Then you've got this setup where we're starting to get inflation. I think it's demographic driven by the millennials, which comes through real estate. That is your gateway for money getting in the hands of people and into the economy. Is the commercial banks, 50% of their loaning goes to residential real estate. Residential real estate's going up. We're going to have to build more new homes. More new homes means more new loans against assets that didn't exist before, which is very expansion and inflationary. It inflates larger. That money's going to come into the system. It's going to be inflationary. Interest rates are going to want to go up. They are going to want to go up. They're going to try to, if they hold this thing down, if they hold it down and they're successful, you're going to get large real negative rates, which means inflation is getting bigger than the interest rate and it's growing like that. Gold, silver are going to just do a moonshot. All other commodities are indexed to gold and silver, and they're going to moonshot as well. Oil is going to go way up. Uranium's going to moonshot. I mean, it's in all the companies that we own on this channel. That is why we're set up the way we are. It's going to be cheetahs and moons, and like Vegas is going to be in the background. I mean, this is going to be pretty sweet. This is going to be a party. So that's what I foresee. And hopefully I answered a lot of your guys' questions. I tried to answer a couple of them here. Hopefully you guys like this clip. Give me a thumbs up. Leave more comments and questions below. Love to hear them. And thank you for listening. This is Finding Value.